All right, let's do this.
Hello, everyone. Thank you for joining us. My name is Ann Gaviola, and as you probably heard, I'm a senior digital broadcast journalist at Global News. I'm a national anchor, reporter, and host, and I've been covering the business beat for well over 15 years. I also took a little time out to work in the private sector in fintech back in 2018. So this discussion is going to be of particular interest for me, both professionally and personally. And I like to get right into it. So first of all, I would love for each member to do a very brief intro of themselves and the lens through which you're coming at this topic today. And I also want to get right into, beyond plastic. Do you think that the physical card is going the way of the dodo? Is it going extinct? Or is it simply that, the fintech pie is going to change in terms of the sizes of the slice and who the different players are? I think I have some idea of what you think. But let's start things off with you, Hiroki.
Okay, yeah, so I'm Hiroki. I'm the CEO and co-founder of GoCardless. We're building the world's bank payment network, and we work with all sorts of businesses, helping them to collect payment directly from their customers' bank accounts.
So my name is Ugne Buraciene. I'm the global CEO for Payable, and we are sort of the Lego of the payments industry for anything payments. And happy to pass on to my colleague on the right.
Thank you. And my name is Hristo Borisob. I'm co-founder and CEO of a company called Payhawk. We're in the spend management space. We help companies manage their B2B payments, from expense reports to accounts payable to reimbursements to employees to reconciliation of their data. We currently issue company cards in 32 countries, both debit and credit.
Okay, so back to my question. What is beyond plastic? What does that look like to you? Anyone can answer in any order.
Who's here first?
Yeah,
first.
So apparently I'm first, that's fine. Look, my thoughts on everything related to payments is that everything has a place and space and a specific use case. I do not believe cards will go extinct. We are seeing maybe the physical card is kind of migrating to be more into the the digital space, which we see with virtual cards, acceptance of digital wallets. But I truly believe that it has a place in the future, and it will be in a combination of other payment services and other payment infrastructure that it can be implemented and used for.
Yeah, I think on my side, I would agree. I think at the end of the day, we do see some markets where plastic cards are not needed. So if you look at China, they're way beyond that. Everything is digital, QR codes, digital payments. The use of cards is not there. But if you look at the general market, the mainstream market, cards are still highly adopted for multiple reasons. At the end of the day, it is yet something that a lot of the merchants require. And I think when you look at the general trends, usually they start with consumer. So I would say that it is really driven by the consumer demand and the way they're using technology. We have seen the adoption of, for example, Apple Pay and Google Pay, how much they accelerated for the cases where you don't need a card. But there are still cases where you are required to have a card. And unless some of the merchants start transitioning in a way to support some of the edge use cases, for example, going in the US, being able to tip with a physical card, which is still required, and being able to do that with a digital one, is going to really enable more and more of the transition to this. But I think that is going to be still, I would say, 5 to 10 years away before we completely forget about the cards.
Yeah, I think I kind of agree with what you were just saying there, in the sense that it depends on what time horizon you're asking the question. So I think in the short term, certainly, I don't think cards will disappear. But I think over the longer term, there'll be more disruption. And in particular, as you see more forms of payment emerge and the ability to move money more efficiently, I think there's a natural tendency for you to move to those more efficient rails. But I think it'll take time, and it's not something that's going to happen in 2-3 years. It'll be more 5, 10, 15, 20 years where you'll see that kind of happen.
Yeah, and very jurisdiction specific, obviously, as you outlined.
Yeah. And also I will add to that, if you look at the statistics, from the card schemes like Visa, MasterCard, the growth and adoption of cards is increasing. So, we're talking, and I think it's very popular in this industry to talk about, like big things, going boom or, going extinct. But there is steady growth and steady use cases, for the card. So I think maybe looking at, as you mentioned, 20 years, maybe that picture will look slightly different. But for now, it's consistent. There's many markets that is requiring, physical cards, and we see that across, the globe that the issuing of the cards is actually on the growth.
Yeah.
One thing that is particularly fascinating to me in the fintech space, and unless you work in it, you don't really have a great understanding of it, is just how quickly things change, how quickly things move. We have seen, trends, accelerated trends pop up because of the pandemic years. Things that would have taken probably, let's call it 5, 10 years to happen, happened not quite overnight, but very rapidly. And now we're entering kind of this stage where people are more aware of AI. And it's such a big blanket term. But again, I see this as something that is going to change and accelerate trends very rapidly. From where you sit, where do you see AI being a real game changer, a real disruptor in your fintech space?
I think it depends on what you mean by AI, right? At the moment, there's a lot of focus on generative AI. I think it's actually still a bit of a question mark as to how that's going to impact payments. I think, more likely it changes what the checkout experience looks like, and I'm not sure anyone really knows what that looks like yet. But actually, when you think about AI more broadly, and things like machine learning, etc., these are techniques that have been used in payments for a very long time, actually, and we already use them a lot, to reduce failure rates, to reduce fraud rates, etc. And this is quite common practice in the payments industry. So I think actually, if you think of it a bit more broadly, payments as an industry has adopted a lot of these techniques for 5-10 years already.
I have to agree with that, I think for me the immediate use case is definitely for monitoring and risk, because that's kind of we've been doing that or parts of it, for many years. So it's kind of an evolution moving towards and utilizing in that matter. Also, an interesting use case in general for generative AI is to speed up the process of implementation and integration for merchants. So simplifying APIs, making it easy, for the developers also, to implement that. So I think that's kind of for us, at least in my view, from the payment space, two immediate use cases, and it's already being utilized. And then from the user perspective, I think there's really long ways, that it can go, but I'm probably not the best of the experts to judge on that.
Yeah, and I think if we talk about the financial services and the fintech market, we have to look back at what caused that. And usually when there is such kind of a search into certain technology, there is a technology trigger. And in this case, that was clearly the infrastructure providers lowering the barriers to enter this market, allowing other companies to build their companies on top of them. And I think this is going to be the same trend when it comes to AI. I think we are going to really see the productivity in this market moving away from the hype cycle that is at the top, going into the actual course of alignment where we are going to see more and more infrastructure providers allowing those companies to build and embed AI within their certain products. And I think for the financial services market or for the fintech, one of the places where I do think it has a lot of application is reporting and access to information. Being able to actually ask questions, and an AI tool to understand you better, much better, to provide you insights and analysis on the team where you can actually substitute a lot of the data scientists, a lot of the BI teams you currently have that are building this data, and a lot of the work required by accountants to reconcile and to put together this report for you to make decisions. I think this is the place where it is extremely excited what we're going to see for AI, specifically in the fintech space in the next few years.
Yeah, and I think it's one trend that I've been hearing about, certainly at this conference, is, AI is kind of the buzzword right now, but in a couple of years, we won't be talking about AI. It'll be table stakes. It'll be embedded in the things that companies ask for, and it won't even be kind of this separate category. It'll just be part of the total package. Is that kind of your view? Is that where you're already seeing things going? As you mentioned, some of these things have been offered well long before they were under that kind of category of AI.
Well, I think there's so much potential to make a lot of the core processes that exist within businesses more efficient through the use of AI. That the businesses that don't embrace it as it sort of develops, I think will struggle, right? Because they won't be as efficient. So I think there'll be a natural kind of selection bias there. But for me, what I'm still feel like it's too early to say, but I'm really interested to see is how does the actual checkout experience evolve as the way that people interact with the services they're using moves more towards generative AI being in between that, right? And I don't think anyone has really shown what that looks like yet, right? It's still quite early, but I think that could lead to some quite meaningful changes. And in particular, going back to the topic of beyond plastic, you're creating a layer between the actual customer and the merchant in terms of interaction, right? And in much the same way that things like Apple Pay have changed the way that you're able to pay for things, I think that we might see a similar kind of shift with generative AI. And then the question becomes what's the ideal way to make the payment happen behind the scenes on that? And I think it'd be interesting to see how that evolves.
Yeah, I see a lot of head shaking here.
Yeah, just kind of, we talked a little bit about today on the embedded finance panel about these blurred lines. And I think your question is kind of really about that, right? Because ultimately, it's utilizing the best tools for what we need to achieve, this seamless, payments experience. So wherever that will take us, I think, the companies, will follow through. And I'm just excited, to see what that would look like.
Yeah, and I think most of the current use cases we have are actually showing us what is possible with the technology, but I still would say that the general market is more of a playing ground right now. We're still really exciting early adopters of this technology, and we're still yet to see the mainstream being able to utilize AI in a daily cases, except, let's say, the ChatGPT and those models that are showing what you can do in terms of a personal assistant. And I think there is still a lot to be done when it comes to actual practicality for this technology.
And also, I think there's another part that we just didn't kind of cover is sort of the regulatory and security perspective, because AI has that sort of potential threat, and in a highly regulated environment, where we need to make sure that all parts of the chain are completely secure, there needs to be a certain level of control, and I think that will be a further discussion how that can be sort of contained, but also not sort of killed in a way that that it still propels growth in the payments industry.
Yeah, I think that kind of leads into that safety and security question, always top of mind, certainly in the fintech space. With AI, you're adding a layer of complication and a layer of risk in many ways, too. Let's put the customer journey piece aside. We'll come back to that. But what is kind of your approach when you're trying to balance that safety, security, but you do want to be innovative?
Well, I think that one of the opportunities here that I think not just us, but many payment companies will be looking at is how can you make some of the compliance processes and the risk management more effective by leveraging things like AI, right? All of a sudden, you can potentially increase the effectiveness of the agents that are doing all of this really difficult work, and give them more information, more insight, better data, and making it easier to digest. And so I think there's actually an opportunity to improve the level of compliance and security within the industry if AI is used in the right way. But I think this is still quite early, right?
I think it should start from the fact that you're formulating a product, and if you're formulating a product for a problem. So when you're doing that, and it involves, as I mentioned before, payments, which is a highly regulated environment, you need to think of, yes, as a payment service providers, our core, responsibility is to safeguard, the funds, right? So with having that in mind, you still can tailor it, to make sure, that the client gets, what they want. But it needs to be combined with the technology and combined with this sort of, future thinking of how it can be done in a safe manner, and you still achieve the same product and the same capabilities that that you intend to do. So I think it's a tricky part, but it involves a lot of aspects to get it there.
Yeah, and I think in balancing security, that is kind of a very clear concern. I think the way you can manage that is just by focusing on use cases that are pretty much not that business critical or don't deal with very sensitive data information. So we wouldn't deploy AI models in our credit card data environment for sure as the first start. Maybe we're going to start from places where it is, let's say, focused on developer productivity or tools that are kind of on a reporting side that at the end of the day, you might get a wrong report also from somebody on your team at the end of the day, right? So just trying to find those use cases where that's not going to be that existential threat for your business to start with. So maybe this is an area where you can focus on, where at the end of the day, the security is not such a big concern. And I think the other thing that is very important is regulation. I really hope that's not going to happen actually on top of AI, because I think that is where we can prematurely go and suffocate the technology and an opportunity before we fully understand it, and especially knowing that there are many parts of the world that might not have such kind of restrictions, it can really topple the balance and handicap a lot of the companies that are out there trying to go and focus on AI and innovation if their regulatory framework doesn't allow them. And when I'm saying that, I'm actually meaning more of the European Union, and I really hope they're going to be tactical and strategic about how they focus on that.
Yeah, you bring in the regulation piece. I would love to hear some of your opinions, especially as we talk about different jurisdictions, and certainly when we talk about open banking, for example, it does seem like the UK's got that first mover advantage, and that's sort of the template that a lot of countries are looking at. So maybe some thoughts. You're headquartered in London, though you have offices around the world. What do you think of that, the UK example, when it comes to open banking?
Well, I think that it's a good example of where regulation can be a force for good, right, and a positive, and especially when you look at how things have evolved in, say, UK and to a certain extent Europe versus maybe some other countries where there's been less regulatory led. I think that you're seeing that these kind of open banking initiatives are broader in scope and maybe having a bigger impact sooner. So I think that can be a positive thing. But I think you have to be careful, right, when it comes to regulation in general. Like, as you said, like if you regulate things too early, or if it's done more as a protective thing as opposed to as something to open things up, then I think you can stifle innovation, right? And so I think the balance is key. But in terms of open banking in general, I think we're seeing some really exciting use cases. Definitely we see the UK as a little bit ahead of Europe in terms of the types of experiences that you can create. And part of that is due to the fact that the regulators have been able to be a bit stronger, and there's a lot of market dynamics behind that. But actually it seems like that's the trend that we're seeing all over the world, right? There's about 70 countries now that are experimenting with a combination of real-time payment systems and open banking type APIs, and so it's quite exciting seeing that develop. But I think there'll need to be some patience. I don't think this will happen overnight.
Maybe I'll be a little bit controversial here, because I mean, we're talking about stifling innovation, but I think open banking has a very unique case study here, since the part of the consumer was not really protected, for open banking. We talk about, payment initiation services, so PIS and AIS. So actually, from my perspective, yes, you drive the innovation, you want, the adoption, but if you don't safeguard, the end user, I think that's a downward spiral, and we're seeing that in other financial service, products where the regulation didn't grow fast enough. I'm talking about, embedded, finance, for example, for lending as well, right? So where you see these gaps, there's a big discontent, and this adoption slows down. And the companies who are at forefront, they're starting to lose their positions as well. So I think to have that balance is very important, and we should not forget that we are catering for end user ultimately, right? And we need to make sure that the consumer is completely protected, and that's really a point where the regulator should really have a good hold on.
I think that's a really good point. I mean, we're seeing that in the UK with there's a lot of conversations about this thing called variable recurring payments, which is about shifting open banking payments from just one-off transactions that you authorize each time to being able to have a continuous authority and collect payments on a recurring basis. And right now, as you said, that there is no real consumer protections around these things, which I think kind of makes sense in a context where you're authorizing each transaction specifically.
Yeah.
But as soon as you open it up to things like VRP, then that needs to exist. And we're seeing the regulators engage on that, but I think people are underestimating the complexity of these things. And this is sort of part of the reason why my view is that open banking is very interesting. It's already having an impact, but it's going to take a while for the full impact to be felt. And it's exactly for these kind of reasons. There's a lot that needs to happen.
I would actually disagree here, because I think one of the challenges that the expectation for open banking was much bigger. And I think, yes, we do see use cases where open banking could have provided a lot of benefits, but unfortunately, let's think about why open banking exists in the first place. It was very clear strategy for the EU regulation to actually diminish the effect of card providers like MasterCard and Visa on the effect of the economy and the consumer payments across the world. So right now, we have 0.4% to 1.9% of the cost of everything going into issuing banks, issuing cards. And that's actually money going, obviously, outside of Europe. And also from a national security perspective, and also from the perspective of, effect on the customer basket on every consumer good, the European Union take the statement that, hey, why don't we build a parallel system that is instant, that is free of charge, and much more cost efficient for people so that merchants don't have to pay those fees. The challenge with that regulation, though, and I think the reason why it hasn't achieved its potential is because the regulator was too optimistic, thinking that banks do have an incentive to provide this technology and to be part of it, except locations like the UK. If you look at the general space in Europe, it is much, much more diverse and controversial in terms of the quality of the infrastructure that banks are providing, because at the end of the day, they are earning between 0.4 to 2.5% interchange from those card transactions. And in the case of the open banking, there is zero revenue coming into that. So the conflict right now for those bank providers that do have to provide this experience is really clear conflict of interest. If you go and provide this amazing experience, you're going to start losing a lot of revenue. So I think that was something that wasn't really well thought of as an effect from the regulators when they introduced the technology. And unless we're going to see some changes to that model, it will be really hard to go and substitute the card payments with payment by face or by a QR code on a technology that is so well adopted today as the cards.
Look, I have to agree to that because, we talk because the topic itself is like, is cards, dead. But when you think about it, the amount of years and the amount of infrastructure that went into making, the card schemes, networks and the cards, the way they are, with all of the protocols, with all of the, safeguarding, all of the chargeback, dispute, all of the things that, for example, open banking doesn't have for the payment initiation, basically service, right? So the market was kind of open for it. Yes, it's cheaper. We're going to do it, fast. But then there's now became a big gap because you cannot really do what a card does. The experience for the user, and also basically what the user gets in terms of the security, does not exist with open banking. But also not to forget that open banking is not only related for payment initiation services. It's an open bank as a concept, right? It's the use of data to work, on payments and to make, payments or any other kind of service, better in a way, right? So I think the monetization actually part, when you look at it, it doesn't come only from the payment or account-to-account, payments. There's a lot of use cases where you can earn from other various types of, data be used in the open banking concept. But needless to say, I think that, cards, again, have a place, and, and that's why open banking has, certain, downfalls in the adoption and in the development.
Yeah, when you guys talk about some of the regulatory missteps or missed opportunities, in hindsight, it seems fairly obvious. What is, and I don't want to dwell too long on regulation, but it's a hot topic. What is the right approach? You talked about balance. You want to have consumer protection. You don't want to quash innovation. You want to give companies the guardrails so that they can go ahead and build. What is the right approach?
I think if we would really know, I think that would make life much. It would be. I think it's a combination of a few things. So I think you want to make the payment experience seamless, but that cannot come at a cost of security and regulatory issues. So you have to combine those in the most efficient way. And I think companies, who do that will have the best, product at the end of the day and will succeed.
Yeah, I think at the end of the day, you cannot build regulation in isolation. And I think that is the challenge here, that a lot of those you did not follow correctly the value chain of who is actually benefiting from this setup and how those businesses are going to change their behavior because you want to go and change, let's say, a certain effect. And in this case, regulation needs to be designed with the right players in mind. And I think in this specific case, because banks are in general heavily regulated, the expectation was we are going to just tell the banks what to do. And I think in this specific case, that is the result, where the banks are actually not being able to provide the high quality infrastructure because they have zero incentive. They're actually seeing the fintech players not as an extension of their core services, but actually as a threat. And I think at the end of the day, that is quite important, that you need to think about models and regulations where you want to change the balance of the value chain. You need to make sure that everybody has a way to proceed or substitute those specific revenue streams.
We're kind of towards the end of our time. I could seriously go on with you guys for a couple hours. But I would like you to speak to the audience. There are a lot of founders in the fintech space here, or perhaps some hopefuls, some people who may not be starting up their company yet, but who knows in the next few years. And they look at the success that you have already achieved, some pretty big name backers, unicorn status. So quite an impressive group. What would your advice be to founders who are trying to navigate these turbulent times and also a time when, fundraising's pretty tough?
I would say I'm really glad to be able to address this audience, because 5 years ago, 2018, we were 2 guys on the alpha stage here.
Amazing.
And now we are 320 employees with offices in 8 countries, have raised $240 million for that time frame. And I think in our case, I would say that focus on building high quality value for customers, something that you are able to really solve a core problem for them that is actually a pain point, rather than let's say something that is a painkiller, rather than something that is just vitamins for the user. And make sure you have a very clear way on how to actually monetize and capture that value, because I think that is some of the challenges we have seen over the last 2-3 years. A lot of companies, their business model was selling $1 for 80 cents, and they were finding many people who wanted to buy this $1 for 80 cents. But at the end of the day, the party is over, money are expensive again, and you need to find a way to be sustainable. So finding a core problem, spending as much as possible time. When we came here for the alpha stage, we didn't have a product, we had prototypes. So we were selling to people the idea of what we are going to be building, and the first customer that found us online came to see whether we are actually real people and whether these cards are actually working. So I think doing a lot of iteration on a whiteboard on how you're going to create value is the most important thing where you need to spend your time today.
But also, it's perfectly said, and I think it's very little, that you can add to it. But I think the monetization part is very key, because, it's great, to build, great, interesting, products. But if you cannot monetize that, I think that's a very hard pitch and a very hard sale later on.
Yeah, I fully agree with that. And not just monetize, it's like, can you do it with what's going to be good economics, right?
Exactly,
fintech is an industry where you need significant scale, but you need to get to that scale, right? And so if you've got a model that, as you said, is selling $1 for 80 cents, then that's very hard to scale, right? And so you need to make sure that it's not only monetizable, but also is underpinned by unit economics that actually make sense, right? And you're building a sustainable business. And I think all of us are getting that reminder in this market, right? Where maybe before people kind of lost sight of that, but fundamentally these things are important.
That feels like the right place to leave it for founders present and future. I also invite you to think about some of the unintended consequences, perhaps some of the technologies and the solutions and the services that you put together out into the world. Thank you very much for your time, and thank you to my panel.
Thank you so much.
Thanks for having us.
Find us on social media and continue the conversation.
I don't know.
Talk to us.